Okay, Diwan, thank you very much for that. Nestle numbers are up for you on your screen, and it's bang in line with street expectations. 885 crore is what the company's reported in terms of a bottom line, a slight moderation of 4% year on year. And the top line too, at about 5,500 crore, has come in line with street expectations. The stock currently is up close to about 1.8%. So after HUL disappointed the street in terms of its EBITDA margin guidance by lowering it, saying they'll unblinkingly focus on growth when it comes to growth versus margin trade-off, Nestle seems to have delivered and met street expectations. We'll await more in terms of the commentary, but revenues at 5,503 crore, in line with expectations, a growth of about 4-5% on the top line. Bottom line has seen a slight bit of a decline of about 5-6%, perhaps in the bottom line compared to it on a year-on-year basis. But the stock is holding up okay. We await the margin performance and even the volume growth.
Absolutely, margin performance and volume growth is something that we're keeping an eye out on. As of now, seems like largely in line with what we were expecting. Nestle is managing to hold on to some bit of a gain as well in today's trading session. 1% uptick as of now, just around that 1% mark. In terms of commentary also, what they have said that, they are seeing beverages, confectionery, which is seeing a good growth coming in for the company. So that is something that is working out well. Margins is something that we'll be keeping an eye out on. But yes, on that note, we're going to slip into a very short break. And okay, actually, we have Prakash Diwan who's joining in with us as well. Prakash, good morning. And Nestle, in terms of numbers, what's your first cut coming in for Nestle? HUL, while it's a bit of a disappointment coming in on that front, Nestle seems to be okay. That's also gone into the red as well. So your first cut on Nestle?
No, so, I don't think there was any high expectation from any of these larger FMCG plays because, demand revival is still some time away. Very clearly, even before the numbers were out, data was very clear indicating that there could be still some softness because there's no volume growth. Even if they were to improve margins marginally, it's not going to make a big difference till volume growth comes. For both of them for quite some time. Nestle is probably in a better position given the price points that it sells at and the kind of product mix that it has. HUL has certain other things which at times pull it down, especially the high value, high priced personal care stuff, which Nestle doesn't need to worry about. So I think both of them are very similar. They tell you a very common picture. There's nothing, there's no outlier kind of a performance in any of them. So we'll have to kind of just wait for even the commentary to give you that assuage that doubt whether demand is going to grow from here. There's nothing very, very stellar about the numbers at all.
Naveen Kulkarni, Chief Investment Officer at Axis Securities, is also with us on this show. Naveen, in the FMCG staples, Nestle has a bias more towards urban consumption. And we just heard the HUL management where they're saying the macro triggers are positive and therefore urban will now start picking up. Up until now, it was rural driving growth or rural growth outpacing urban. But now urban should start looking up. Would you read that as a positive for a company like Nestle? And two, tell us about the valuation because, generally high valuations, elevated valuations for Nestle has always kept some people on the sidelines when it comes to Nestle.
Yeah, so the pickup in urban consumption going ahead is a positive, no doubt about that. And it should help Nestle probably more than other companies because the brand strength for Nestle is much higher. Their ability to pass on input cost increases, all those things are much, much better than most of the other FMCG companies. So that is certainly a positive. However, the challenges for Nestle are not so much with regards to valuation, but the overall growth trajectory, right? So the valuations, of course, vis-a-vis the growth appear to be a challenge. If growth were to pick up, right, then, of course, Nestle and the likes of HUL and others tend to have very, very high return on equity, right? So from that perspective, they don't need any significant capital to grow. So all those factors will essentially play out, and then, of course, the valuations will get justified. But the critical element will always remain, what is the growth versus the outlook going ahead, right? So those are the critical factors on which I would say that we will have to look at Nestle and Unilever.
Got that. Growth is paramount for all companies, and growth has been, in line with expectations, but generally we're still looking at very low to mid-single digit kind of a top line growth. The Nestle share price has dipped down close to about 0.5%. Numbers are in line. We'll await the volume details and the commentary going forward. Get into a break. On the other side, by the way, we thank Prakash and Naveen for joining in. On the other side, Mangesh Bhadang from Centrum Broking will join in on the other side to talk about the latest trends from the cement sector. And Nigel, as you can see, is also waiting by to give us a quick preview.